Economics, Standard 12, Unit 9, Fiscal Economics continued. We learnt the meaning of public revenue and the definition of tax according to Dalton, and the sources of public revenue, the classification, tax revenue and non-tax revenue in the previous class. Let us learn today Canons of Taxation, direct tax and indirect tax. Canons of Taxation. The characteristics or qualities which a good tax should possess are described as canons of taxation. It must be noted that canons refer to the qualities of an isolated tax and not to the tax system as a whole. It refers to the isolated tax and not refers to the tax system as a whole. A good tax system should have a proper combination of all kinds of taxes having different canons. According to Adam Smith, there are 4 canons or maxims of taxation. They are canon of ability, canon of certainty, canon of convenience, canon of economy. Canon of ability according to Adam Smith. So Adam Smith classified the canons of taxation into 4. And the first canon of ability. Government should levy tax according to the ability of the people. The government should impose tax in such a way that the people have to pay taxes according to their ability. In such case, a rich person should pay more tax compared to a middle class person or a poor man. Secondly, canon of certainty. The government should ensure that there is no uncertainty regarding the rate of tax or the time of payment. If the government collects taxes arbitrarily, then there will be actually adversely affect, or these will affect the efficiency of the people and their working ability too. So second, canon of certainty. Canon of certainty. And third, canon of convenience. The method of collecting taxes, tax collection, and the timing of the tax payment should suit the convenience of the people. Canon of convenience. So it just suits the people in such a way so that they can freely, without any difficulty, pay the tax. And the government should make arrangements, convenient arrangements, for the taxpayers to pay the taxes without difficulty. And fourth important one is canon of economy. The government has to spend money for collecting taxes. For example, salaries are given to the persons who are responsible for collecting taxes. The taxes where collection costs are more are considered as bad taxes. Hence, according to Adam Smith, the government should impose only those taxes whose collection costs are very less and cheap. So the fourth important canon is canon of economy. Canon of economy. So, there are 4 important canons of taxation according to Adam Smith. First, canon of ability, second, canon of certainty, and third, canon of convenience, and fourth, canon of economy. So, these are very important in collection of taxes. There are 2 kinds of taxes, direct taxes and indirect taxes. Direct taxes are paid by the taxpayer directly to the government. Direct taxes paid directly by the taxpayer to the government. A direct tax is referred to as a tax levied on persons' income and wealth and is paid directly to the government. The burden of such tax cannot be shifted. The tax is progressive in nature. It is progressive in nature. It is levied according to the paying capacity of the person. That is, the tax is collected more from the rich and less from the poor people. The plans and policies of the direct taxes are being recommended by the Central Board of Direct Taxes, which is under the Ministry of Finance, Government of India. Central Board of Direct Taxes plans and carries out the policies of the direct taxes. There are merits and demerits of direct taxes. Merits of direct taxes are equity, certainty, elasticity, and economy. So, merits of direct taxes. Under merits of direct taxes, the first comes equity. Direct taxes are progressive. That is, rate of tax varies according to tax base. For example, income tax. Income tax satisfies the canon of equity. Income tax is also one of the direct taxes. Secondly, certainty. Canon of certainty can be ensured by direct taxes. For example, an income tax payer, he knows when and at what rate he has to pay income tax. So, second, certainty. So, an income taxpayer knows when and at what rate he has to pay income tax. Thirdly, elasticity. Direct taxes are also satisfy the canon of elasticity. Income tax is income elastic in nature. As income level increases, the tax revenue to the government also increases automatically. So, elasticity is another merit of direct taxes. Elasticity is another merit. The fourth important merit is economy. The cost of collection of direct taxes is relatively low. Cost of collection of direct taxes is relatively low. The taxpayers pay the tax directly to the government. So, the cost of collection of tax is low indeed. So, economy. So, there are four important merits of direct taxes: equity, certainty, elasticity, and economy. And of course, direct taxes has got its own demerits too. Demerits of direct taxes. Demerits. First important demerits is unpopular. Unpopular. That is, direct taxes are generally unpopular. It is inconvenient and less flexible. Secondly, productivity affected. According to many economists, direct tax may adversely affect productivity. Production is affected. Citizens are not willing to earn more income because in that case, they have to pay more taxes. So, citizens are not willing to earn more income. So, if their income increases, they have to pay more taxes. So, productivity affected. Productivity affected. And the third important demerits is inconvenient. The taxpayers find it inconvenient to maintain accounts submit returns and pay tax in lump sum. Maintaining accounts, submitting returns and paying tax in lump sum is really inconvenient for a taxpayer. So third, inconvenient. And the fourth important demerits of direct tax is tax evasion. The burden of direct tax is so heavy that taxpayers always try to evade taxes. This ultimately leads to the generation of black money, which is harmful to the economy. So many people, the taxpayers, they evade tax and they don't pay the tax in proper time. So tax evasion is another demerit. Tax evasion. Tax evasion leads to black money, which is very harmful to the economy. So there are merits and demerits of direct taxes. Under merits, equity, certainty, elasticity and economic comes. And there are certain demerits for under direct taxes, namely unpopular, productivity is affected and the tax payment is inconvenient, and also tax evasion takes place by the taxpayer. Let us continue learning indirect taxes in the next class. Thank you for listening.